Hello and welcome to the look ahead for Friday, the 26th of July, with me, Fiona Cincotta, Senior Market Analyst at City Index. So, overnight, we'll be watching out for Tokyo inflation. Then, in the US session, we'll be watching out for US core PCE, the Fed's preferred gauge for inflation. Earnings as well, plenty of earnings coming through. One to be focused on will be NatWest on the FTSE. So just kicking off with US inflation data, we've been waiting a week for it, and expectations are for core PCE to cool to 2.5% year on year, down from 2.6%. Personal spending will also be in focus, and it is expected to increase 0.3% up from 0.2%. Now, the data comes after a rockier week on the markets. We had US GDP data today, which actually came in much stronger than expected at 2.8% growth annualized. That was up from 1.4% and well above the 2% forecast. However, on the other side, we've had durable goods orders that were sharply lower, down 6.6%. So a little bit of a mixed bag, but the market broadly came away feeling a little bit calmed about recession fears that had been sort of building. There were concerns that the Fed was needing to cut interest rates faster. And actually, that doesn't seem to be the case. The GDP data coming in with personal spending actually across the quarter also stronger than expected. And that's obviously a key driving force for the US economy. And the fact that personal spending remained strong was encouraging. And it does suggest that the Federal Reserve does have time on its hands as far as rate cuts are concerned. So we're not expecting a rate cut next week. And next week is likely to be a setup meeting for the rate cut, which is expected now to come in September. So just having a look here, this is the gold chart that we're looking at. Now, as I said, it's been a pretty rocky ride on the markets this week. We've had a massive sell-off in risk assets, which is interesting because gold is typically seen as a safe haven, and yet it's fallen lower, and partly because we've seen those expectations just rein in slightly for the rate cut in July, which had been sort of starting to get a little bit concerning. But if we just have a look at what's going on in this chart here, now we've got this rising trend line, which dates back to the start of the year, beginning of February, just testing that right now, actually. So, I mean, what's also interesting with this gold is actually we've been seeing gold rise in line with US equities and US indice markets. So actually the fact that we've seen that sell-off in the indice market and then we're seeing that sell-off in gold, maybe that's not so surprising given the way that they've been both trading at all-time highs in the past month. But as I said, that sell-off, just testing that rising trend line, this is going to be quite interesting to see what happens as we test this level here. Down below the 2400, it's fallen down around, it's at 2370. Just testing 2357 at the moment. So you know what, if we get a break below there, that's going to bring the 100 SMA and also 2330, 2325 level, which is a level which has been important across the past few months as well. If we get a break below there, this is going to be the key level to watch, just below 2300. So that's the we've got the sort of June low sitting down there around the 2286 level as well. So just be wary. That's going to be a key level to watch if we get a break below here. If we're finding that the trend line holds, then on the upside, be watching for 2400. That is a fairly strong bearish engulfing candle, so just be wary of that. But if we did get a move above 2400, then look for 2450 on the upside. So as well as gold, we're just going to take a look at what's been going on in the S&P 500. Obviously, with this core PCE data, if we find that we've got cooler than expected core PCE data, then that could raise those rate cut bets. Now, interestingly, as I said, we saw those sort of concerns over the Fed needing to rush rate cuts through, and also this was also those earnings that we saw from Apple and Tesla, Alphabet and Tesla, which underwhelmed. So even though Tesla disappointed, Alphabet beat forecasts and revenue for profit and revenue, but was still a little bit underwhelming as far as the ad revenue for YouTube was concerned. And given that it's traded so high, the valuation is so lofty, anything less than perfection at these levels is going to mean a bad hit. So we sort of saw that sell-off in the mega caps as well. That brought the S&P lower. We did see a further sell-off today, but that actually found support on that rising trend line, which dates back to November, as we got that GDP data through, which sort of calmed concerns of perhaps more of a sort of hard landing coming in the US. The fact that growth remains relatively upbeat compared to what was expected. Personal spending is also stronger. It does point to that lull being a short-lived one. So as far as levels to be watching, as I said, key one is going to be today's low, which is the 53.90, so just below 5400. That's the rising trend line support. If we get a break below there, then we could see a test of that 53.50. And then below that, I'd be watching out for this one here around 52.77, which is the April high. On the upside, if we're finding that this recovery continues, and this was merely just a buy the dip, because we've seen buying the dips across the way here. So this could be just another one of those sort of moves that just send jitters into the market, and we get a recovery. If we do, looking for a move first of all above the 5500, and then this level here, 50, around the rising trend line support, the near term one at 5600, ahead of the all-time high of 56.65 or 56.70. So they're the levels I'll be watching on the upside. The inflation data, I think, is very, very important. Obviously, we do have the Fed meeting next week, so it will be the last sort of inflation print that the Fed get before that meeting. If we get sort of sense of hotter than expected data, then hotter than expected inflation, then that would mean that the Fed is likely to keep interest rates higher for longer, which could also have a negative impact on stocks. Next week, there is a lot of earnings, big earnings coming through. We've got a lot of the Magnificent Seven are reporting now next week. So that, again, is going to be really quite key for deciding what happens next in the S&P 500. If we're getting, upbeat numbers that provide sort of fundamental support of these lofty valuations, then we could see this price rise higher again and test all-time highs. Just finally, I think we've got the USD Japanese yen. We can't really not talk about the US dollar Japanese yen. Look at this. This has seen the really sharp fall off. There was speculation of intervention. Actually, it's probably just likely there was the speculation of the intervention here. There was speculation of intervention yesterday, but actually, I think that's now looking like it was more just the unwinding of the carry trade, as the Bank of Japan is expected to hike rates by 10 basis points next week, and the Federal Reserve could cut rates. We have seen after the data, that GDP data, that we found support here on this line that we were expecting to find support on, which was the May low and also the 200 SMA, and the price has rebounded quite sharply higher. So there's a really long lower wick on that candle, which suggests that their selling demand just wasn't there at those lower levels. Just on the upside, what to be watching for: Tokyo inflation is expected to come in hotter at core inflation at 2.2%, up from 2.1%. Now, if we get a sense of hotter than expected inflation, then that could give the yen another boost, especially if we get cooler than expected US inflation. Then we could be looking to retest this level here. But I think, 151.94, I think that's the level that's probably in now. until we get the Bank of Japan, the Federal Reserve next week. On the upside, watching out for 155 as a level that needs to be retaken in order to extend the recovery towards 158, which was the May high. So that is everything from me. I hope you've liked what you've seen. So that was everything from me. I hope you liked what you've seen. And if you would like to receive more videos like this, then please do subscribe.